market update. So as you all know, First Republic kind of announced, there's a lot of rumors going on. First Republic's going to shut down. There's going to be a run on the bank. They were having issues. Their stocks tanked. Well, the Fed stepped in and protected First Republic. So pretty much the government said that all the competitors have to deposit $30 billion into First Republic for 120 days, clearing up liquidity issues. So I don't think we're going to see First Republic shut down. Even though they're a competitor of ours, they're going to stay alive and healthy. Then it's kind of like, and I wrote it out here, it's kind of like the Fed's telling Costco and Target, hey, Walmart's not doing great. You all need to buy from Walmart to help them out for a few months. So that's what's happening with First Republic. They're going to be here to stay, and we're not going to see issues with them going forward. At least we hope so. Inflation is on its way down. As you can see here, in 1 year, it's come all the way down to 6%. It peaked in June at 9.1%. Last month, or should I say in March, we were at 6%. Next month, we're probably going to break 6% and be in the fives. So it's good news. As you know, inflation, the higher the inflation rate is, the higher the rates are. So as inflation comes down, mortgage rates come down. So I'm thinking in the next month or two, we'll start seeing rates come down, but the banks still aren't budging. So rates are at 7.25% for conventional. Jumbo is about 6.875. Now, market updates out of the way, let's jump right into it. Closing costs, what the heck are they? So this is something I put together for all my clients, and it itemizes everything, right? So I'm going to just start from the top. This is breaking down a $1.5 million purchase, assuming you're putting 20% down. With current market interest rates for a jumbo loan, it's about 6.875. So as you know, there's going to be principal, interest, taxes, and insurance. So principal interest, your payment is $7,883 a month. Your property taxes are based on LA County's tax rate of 1.25%. So monthly, that's $1,563 a month. Homeowners insurance, which, just insurance for the property, is $120 a month. There's no PMI because you put 20% down. So your total monthly payment is $9,566. We're going to come back to that number. Now, the down payment on this property is going to be $300,000, but you're going to notice that funds to close are $330,000. Well, where's that $30,000 going to? Well, here it is. So there's multiple parties to a purchase transaction or a real estate transaction. There's the appraiser, there's escrow, there's title. I want to go through each one and kind of itemize what each one does, right? So an appraisal can vary in cost. So when you're talking to your clients and they're like, well, how much is an appraisal? Of course, it's my job to answer that question, but in the field for yourself, it's good to be informed. Typically for a jumbo transaction over $1 million, it's going to be $750. Now, if it's over $2 million, it might be over $1,000. The moment it's over $1.5 million, most lenders will have you do 2 appraisals. So it's not just $750, it's $750 twice. So that can add up to a bigger cost. If it's less than $1 million, 9 times out of 10, the appraisal cost is $550. So to wrap it up, under $1 million, $550, over $1 million, $750, sometimes up to 2 real estate or 2 appraisals if it's over $1.5 million. Credit report fee, this is just an example, it's $150. That's very small. You have your underwriting processing fee, which varies from lender to lender. Now, here's the key part. There's a point to this transaction. To get this rate at 6.875, it's a point. So most lenders like Chase or Wells Fargo, they'll advertise a rate and they'll have a little asterisk at the bottom of the rate. So you have to buy that interest rate. So in this case, 1% of the amount you're borrowing is $12,000. So a point, 1% is essentially a percentage of the loan amount. So a point is a percentage of the loan amount. So in this case, it's $12,000. The next thing you're going to pay is escrow and title. So as you all know, escrow is kind of in charge of facilitating the entire transactions. They're the ones that hold the money. They're the ones that are in contact with all the parties. So their fee is about $2,600 all in, depending on the purchase price. This is for $1.5 million. Now, title insurance is about $1,900 to $2,000. And the whole reason for title insurance is to protect your buyer. Now, let me give you an example. Let's say I have a house and I'm selling it and I sold to a cash buyer, for example, and the buyer just chooses not to do a preliminary title report. It's crazy. You should. And here's why. Let's say I had a roof done and I never paid my roofer and there's a lien on the property. Well, now you come and buy my house and I sold it to you, and I didn't disclose that I had a lien and there's all these legal issues behind it. Well, now that contractor is going to come knocking on your door, or you'll get a letter saying, hey, this property owes me X amount of dollars. It's been a year. I haven't been paid. I'm suing you. So you want to make sure that there's no legal issues or encumbrances. And that's why you're paying for a preliminary title report. And of course, there's more to it. It covers, the parcel to make sure you're getting the right square footage and protects you long term. So that's escrow and title. Next is interest. So depending on the day of the month we close, the loan, the transaction, the amount of interest we collect from you is going to vary. So for example, today's the 17th. I put 15 days, so just bear with me here. If we close on the first day of the month, there's 30 days left, right? So we have to collect 30 days worth of interest at closing because your first payment's not going to be immediately due that very next month. So for example, today's March 7th. Let's say we sign loan docs, you're funding today. Your first payment's not April 1st. Your first payment is May 1st. So that essentially you're paying in the rears. So the first month's of interest is collected at closing. So that means we're going to collect the interest for the 18th all the way up until the end of the month. In this case, I just do a moving average of 15 days. It gives the client and everyone an idea of what it would be. So $3,000 is what we would collect, and that's part of closing costs. Now, here's where the closing costs get tricky, because a lot of times I don't think these are closing costs. These are just fees in a sense. It's your money, it's taxes and insurance. So depending on the time of the year, we have to collect a certain amount of taxes and insurance as a cushion for your impound account. So if you're buying a house and you choose to have impounds, the bank has to make sure there's enough of a cushion to make sure that your taxes, your insurance are being paid. So for example, in this case, we're closing, let's say we have a transaction, we're going to close, we open today, we're going to close in April, right? We have to collect 4 months of taxes and 4 months of insurance. Well, how do we know how much we have to collect? There's a calculator. Let me show you. So here's a little calculator. Let me dive into it. So the close of escrow date, let's use March. So for example, if we started a transaction early March or February and we close today, your first payment is due in May. Therefore, we have to collect 3 months. But in this case, for the scenario I put together, let's say we're going to close next month in April. The first payment is June. We collect 4 months. So as you could see, towards September and the November, we're collecting 9 months worth of taxes and insurance. That's huge. So your closing costs can swing. In this case, it's almost $6,000. So when clients ask you, like, what are closing costs? They vary. On average, it's anywhere from $8,000 all the way up to $15,000, depending on the impounds. And if there's points involved, double that. That's up to $30,000. So if you, for par's sake, because we're in such a high interest rate environment, everyone's quoting points. Let's use the par example. That means let's use last year's environment, which was more normal, where there was no points. Closing costs would be about $15,000 for this transaction, or 16, 17, because we're backing out the $12,000 for the points. So closing costs vary based on impounds. They're based on the time of the month we close, and it's a moving target. It can be as low as $8,000 and as high as $15,000. And if you include points, closer to $30,000. Now, this is where the seller can contribute some cash and help minimize these costs, but that's another topic. So that wraps up the meeting for today.